Good morning. Happy Wednesday, everybody. Let's get started. What is with all of these updates my computer's giving me?
Welcome to the show, it's Mortgage Talk. Grab a coffee, sit, and let's unlock the dreams you've got, the place you crave. From the front porch swing to the hidden cave. Talk about your home, talk about your plan, talk about the future where you'll stand. Your mortgage, your dream, your story to give. Let's talk about the place where you wanna live. Got questions? Here's the place to be. A TikTok live mortgage jubilee. Fix or float, we'll break it down. From city lights to your small town.
All right, so I wanted to go over a couple things today. I was talking with somebody the other day, and it just made me think of common myths and misunderstandings. But first off, hello, my name is Kenny Murden. I'm new to TikTok. I am not new to lending. I'm a fantastic resource for you to ask any real estate or mortgage related questions, and I appreciate you being here. I mentor kind of like sales leadership for real estate agents and for loan originators. So I'm definitely a good resource to bounce any questions that you might have, about any of that information there. But what I wanted to talk about today is there are some folks that I've been talking to lately where they are taking on monumental tasks to try to get ready to buy a house. And what I mean by that is there was a gal that's like working in a warehouse, and she thought she had to have 2 years of work history before she'd be able to approve for a home. And I was just like, well, if you have no work history prior to this W-2 wage job, the most you'd have to do to kind of reestablish that kind of income is only 6 months. And a lot of times they might be able to take it, right off the bat because, prior to that, she might have been a student, or she might have been, stay-at-home mom, or whatever whatever the thing is. They just want to document what you've done in the last 2 years, even if it isn't employment, even if it isn't gainful employment. And then once you have a W-2 wage job, that's going to assume continuance. Let's see. New build doesn't want to give me a fixed rate. Is this an issue? I'd be curious to dig in why they don't want to give you a fixed rate, because you should probably have the option of an adjustable or a fixed. They might just have a big incentive for an adjustable rate, and they might just be saying that it's such an advantage to take the adjustable rate that you should strongly consider it. But it's definitely not up to them to decide. If you want a fixed rate, you should get a fixed rate. So that's something really easy to I could work up the financing option for you, and then say I prefer this, or whatever. So but yeah, that definitely sounds, I wonder if there's more there. I'd be happy to jump into that conversation with you. But yeah, talking about, preparing to be approved. A few things that have been coming up in conversations recently. It's true that you need 2 years to use variable income. So if you're self-employed, if you are working side hustle type jobs where you might get paid a lot this month and not as much next month. If you get bonuses, tips, commissions, all of these variable incomes, in order to use all of your income, you need 2 years of history to show that. That's true. But if you're salaried or W-2, you can use the base income almost immediately. And so that was one little situation I ran into just yesterday where I was like, wow, I can't believe that was not known, right? So I don't know, kind of like where folks are at as far as that goes. And then the other thing is about credit. A lot of times people think they need to have a really credit score, and they're like, what if I pay cash for everything and I don't have any credit score at all? Then how do I be able to show the credit in order to be able to buy a house? And so we were talking with a gentleman yesterday. For example, if you only need 3 non-traditional trade lines to be able to approve without a credit score. So if you're paying rent, we'll look at the last 12 months. If you have a Netflix subscription, a gym membership, a cell phone bill, car insurance, like whatever you pay that doesn't show up on a credit report to generate a credit score, we can look at 3 accounts and show 12 timely payments. And even without a credit score, you're able to get approved for a home loan. So those are 2 little things that I've been running into where I was just surprised that people were working too hard, really, to try and get in a situation where they're approved. So whatever the obstacles might be, if you are in a situation where you're trying to get approved for either a purchase or a refinance, let's just have a conversation and just say, what's kind of holding you back? What are the hurdles? And, I'll provide the shortest path from where you are to where you're trying to get. And I'm reminded here, I saw a couple people join here that might be in the business. So if you or somebody is either a real estate agent or a loan originator, definitely feel free to connect. We'll invite you to our next trip up to the UWM headquarters, where air travel, room and board, transportation, and light entertainment are covered. If that's of interest to you, or if you want to share that with somebody that that's either a loan officer or a real estate agent, call or text the number above, and we'd love to have you out there. And thank you for stopping by. But yeah, so a couple of things that I was talking about here is people that were trying to get in a situation to be able to approve for a loan. And in talking to them, their understanding for what they would need to do to get approved was just based on bad information. Needing to work 2 years at a warehouse for a W-2 wage job, that just didn't make any sense. I'm like, that's whoever told you that, they just didn't know what they're talking about. And now you're struggling when you don't need to struggle. You're already approvable in that situation. So it was kind of nice to relieve that pressure, but it was also like, man, you could have done this, 6 months ago. So that was, just something recently that I just wanted to get that out there. So if you find yourself in a situation where you're feeling like you can't approve for one reason or another, definitely reach out and let's take a look and see if it's a real reason or not real. So let's see here. I want to pull up. I like to pull up some pricing. So let's go log in here. You can see me logging in anyway. See if it gives me the error. Sometimes it gives me an error. All right, scan my face. Yes, okay. All right, logging in for us. So what I'm doing right now above my head is not only do I want to, explain to you that I have really aggressive rates and fees, but if you have a situation that you want to get priced out, I like to be able to price these out with you and for you here live as well. And the scenario that I like to start with, and just so you guys know, interest rates generally come out about this time of day, every day. So the different lenders, some of them might not have reposted yet for the day. And then as the market changes, the rates and things can change intraday. Like they can update, say, hey, the market is getting a little worse or getting a little bit better. They can improve pricing. They can make pricing a little bit worse. So when you're talking with a loan originator, we're going to be curious when you say, oh yeah, I have this quote. I got a quote. We want to know, when did you get the quote, right? Because if you got it last week, pricing is different, so it's comparing an apple to an orange. So that's just kind of another thing to keep in mind. If you're getting multiple quotes, you want to get them in the same day if you can. If you want to get a really good idea, but sometimes you kind of know. I mean, if it's way off, you know. But what I'm going to do is plug in a $400,000 purchase for an FHA loan. And then we'll just take a look at that pricing with a 680 credit score. And we're going to do it right here in Texas. And I'm going to say fees in. What does fees in mean? That means we're not going to charge any junk fees. Any lender fees that you're going to have are going to be considered discount points, which are tax deductible. And that's the reason why I do it that way. So you're not going to have any of those like, underwriting or, junk fees that you'll sometimes see in loan estimates here. But let's take a look, see what we're looking at here. Oh, it looks like we got a little bit better. So I'm going to modify this and I'm going to change the rate to 5.125. It's always nice to see an improvement. This one lender just seems to be pricing really aggressively. So at 5.125 for that scenario, we're a little bit less than 1 point in lender fees. It's like 0.8 in lender fees. And what that means, a point is 1% of the loan amount. So it's 0.8% of the loan amount would be the lender fees at 5.125. In this case scenario, I did 3.5% down payment on a $400,000 purchase. So that's just kind of a scenario. If you have a scenario that you are currently working with, definitely tell me about it, reach out, feel free to comment, or if I hide this display, you can see my phone number above. Feel free to reach out, call, or text. If you want to be more private and you don't want to share your information all over, God's green country here on TikTok, then by all means, reach out. We can have the conversation, talk or text, whatever you prefer, get that thing priced out for you. I'm always happy to have you on a private Zoom call as well. So you can kind of get the look behind the scenes here, and I'll screen share the pricing, right there live with you. So you get to kind of pick and choose what you'd prefer as far as pricing goes. And then like the gentleman was asking about earlier, if we want to look at a 30-year fixed, if we want to look at an adjustable rate mortgage, we can look at all of those in, those scenarios, talk in depth on which one's going to make the most sense for you. The gal that I talked to yesterday on here, she was really happy with a 7-year ARM. And for those of you that don't know how a 7-year ARM works, is it's fixed for the first 7 years. I Love VA Loan says FHA is brokered for you guys, right? I have to broker mine. So I am a wholesale broker, right? So even though with us we do some correspondent, and my employer Loan Factory is also coming out in 2026 as a direct lender. I think we're kind of earmarking that for kind of like halfway through the year. So we're making some advantages there, but literally everything that we do is brokered, and even if we do it correspondent, it's non-delegated. So that means the underwriting is done in their office, not ours, right? So, I've worked in, snap, they're following Nexa's recent change. So Nexa, the reason why they changed from Nexa Mortgage to Nexa Lending is because the bulk of what they write is correspondent. So they're doing non-delegated. But what Loan Factory is going to be coming out with is direct lending, which is different than what Nexa is doing. Takes a lot to get the full eagle. I'd be curious. Feel free to shout out where you're at. I'm sure you're doing either correspondent or retail. And I tell people, even though I am partial to wholesale and broker, there's a place for everybody. And I have a lot of friends in retail, and I was actually considering teaming up with some of them with my license. I do both. I work for Patriot Pacific. Awesome. And appreciate you being here in the comments. Love it when I have people that are comments. It makes a much more enjoyable presentation, I think. Certainly easier on this side of the camera if I have somebody to talk with. So I appreciate that. But yeah, no, I was talking about kind of the differences, the pros and the cons of working with, a broker versus correspondent versus retail. And, one thing that I can't do in wholesale that you can do if you are underwriting the deal under your roof is sometimes you kind of already know that the thing is going to come together, but you don't necessarily have whatever document or the last thing that's needed to close. And so I've seen where retail can come in and fund a deal and then ask for whatever documentation afterwards, which is insane. It just that just can't happen in the wholesale space. We need to get the deal absolutely clear to close before we can fund the deal. There's just no wiggle room there. And so that provides a little bit of an advantage to the consumer if they do something with retail. Now, a lot of times on the wholesale side, I was having a conversation with another wholesaler. They were just kind of, on here, and they're saying, well, yeah, retail likes to provide a better experience, and they usually have integrated tech and different things where it has a comfortable look and feel for the consumer. Wholesale, because technology is getting so good with AI and just everything being a lot cheaper, it's really evening out. As far as what I can tell from I take a look under the hood every chance I get of different places. But, the different apps and the usability on the wholesale side is getting pretty comparable to where at least retail was. I'm not sure if retail has made advances. I'm sure everybody is. But that's kind of one thing there. Obviously price advantage is going to be, I think, to the broker world, just because, like I showed here, I can plug in one scenario, and then you can't really see it. They're tiny, but there's tons and tons of lenders that are posting their rates here, and the cheapest one goes right to the top. So it's the true promise of being able to take your information and shop the different lenders and be able to offer competitive pricing, where it's like when banks compete, you win, that kind of thing. And so that's offering what some marketing places offer, in action. But I always caution people, don't make the mistake of plugging in your information into those lower my bills or free rate update or some of these places, because they're going to sell your information. They're not a lending institution. They're going to sell your information to 4 or more lenders, and oftentimes they're not just sending it to like one loan originator. They're sending it to call centers. So imagine having your information going to 4 or 5 call centers that all are staffed with over 100 people, over 100 telemarketers that are going to be pounding your phone. They're going to be calling you, texting you, emailing you, blowing you up, like RIP your phone for the next month. And so with that, if you are, curious, I definitely reach out to, a wholesale lender, correspondent lender, a retail lender, get a couple quotes and just, make the decision what's right for you. But if you can avoid going into those aggregated lead things, man, I feel bad for anybody that goes in there. I encourage everybody to get on the do not call list. So donotcall.gov, and then pre-screen, what is it? It's like opt-out pre-screen or something like that. Yeah, opt-out pre-screen. optoutprescreen.com. So those two sites, I would definitely go up there and register. Especially with AI coming out, they're making it so easy to annoy people with solicited calls. I would definitely let's see. Do you think AI will replace loan officers? I think there's going to be an encroachment. Now, there's two ways to answer this. One is it's going to be difficult because of licensing. So where loan officers were, complaining that we have to, have all of this continuing education and constant licensing, it was kind of an annoyance back in the mortgage meltdown that we had this added, activity or whatever that we had to do, added testing and added different things that we had to do on education and licensing to be a loan originator. But that's actually going to work as kind of a shield against AI from being able to take this over. Now, do I think that's going to be a permanent barrier? No, I think eventually AI will start encroaching in the in the mortgage space to where you're going to be able to apply, and they're just going to be able to do your loan automatically. I'm already seeing it with HELOCs, which is a home equity line of credit, where I can literally just send you what's just an affiliate link to me, and then through automation, they're going to be able to figure out your home value, your income, your credit, and I mean it's like the easiest thing where it just automatically will approve you, and it says, okay, you wanted, let's say $200,000. Well, it'll counter offer and say, I can get you $168,412 or whatever. Whatever you approve for, it'll come back and then you can accept it or not accept it. But I think that's where we're heading. And I think AI is going to it's going to encroach. It's not going to be like tomorrow it's totally changed and everything is AI. I think it's going to encroach to where they're going to start taking 1%, 2%, 3% market share over amount of time. And I don't know what that time is, and I don't have a crystal ball. I'm just totally guessing on this. But I think for people that need, they need kind of specialization, special problem solving. I think there's still going to be at least 20% of the loans that are done right now that are going to need human involvement. Just because, for people that are well qualified, it's actually so easy. The loans feel like they close on their own. So if you have really good income, really good credit and assets, those loans close so quick and easily with very little effort on the processing side of it. And so for those scenarios, it'd be pretty easy to replace the human element with technology. And then it's just kind of like, what's the advantage? There better be a price incentive to do that. What's the max loan amount on a HELOC? There isn't one, right? So you have the home value. Well, I mean, there's going to be set limits, per lender, but some of I guess here, let me just look it up. Let's go. ChatGPT. Log in here. But some of them are going to be like 400,000, 500,000, around there. So I don't want to say like there isn't a maximum per lender, but I'm sure some of them are going to be pretty aggressive. Like they'll allow us to go pretty high. Maximum loan amount for HELOC. So here's one where the maximum loan amount for a HELOC is $750,000 for a primary residence. If it's a second home or an investment property, they max out at 400,000, and this is just one investor, right? So there's going to be multiple investors that are going to have a different maximum threshold that they're comfortable with, but it's certainly enough to satisfy a good amount of the population. And that would be on a primary residence, allowing you to go up to 90% of the appraised value. And then on an investment or a second home, that allows you to go up to 80% of the appraised value. So, good question. Thank you. And one second. So again, I'll just kind of reset since I see there's a lot of new people here. My name is Kenny Murden. I'm newer. I'll call it newish to TikTok now. I've been doing this a little over a month, but not new to lending. Been lending since 1999. Great resource for people that have any questions about real estate or mortgage. Definitely hit me with any questions that you have. And I appreciate you guys being here. I'm coming to you from the great state of Texas. I'm in the DFW area, but I lack the accent. I moved down here about 5.5 years ago from the northern, cold, frigid state of Minnesota. I heard they got pummeled with some snow here recently, but that's the reason for the Minnesota phone number, even though I am in Texas. And I definitely welcome you to shout out where you are getting this this broadcast from. If you are, in a different state, definitely shout it out. I'd love to see where the algorithm is finding you today. And then as far as some of the things that we've been talking about, I've been talking a lot about a wide spectrum of different loan programs. Down payment assistance programs, the debt consolidation refinance. Let's see, this question is 80 to 85% of your equity for the max HELOC, depending on your credit worthiness. So again, what I looked up for as far as the max loan amount on the HELOC, I caught that you were answering him. I looked it up, and on my guideline here, maximum loan amount for a primary residence for one of my investors is a $750,000 loan amount, and that's up to a 90% combined loan to value. But like I said, each place is going to have their different threshold, right? So there's going to be a whole bunch of different lenders that are going to answer that differently because we have different guidelines, different matrices. And they're going to look at not only, like you said, credit worthiness, because they're going to look at your credit score. They're going to look at your ability to repay with your debt to income ratio. And then, assuming you're able to max that out, then you can get up to 750 with this one, but maybe more, maybe less with another. So very good. And then also, answering that leads me to believe that you might be a loan officer. So if you or anybody you know is a loan officer or a real estate agent, reach out, and I'd love to invite you onto our next trip up north. What is the maximum debt to income ratio? So on that particular lender, they go up to 50%. Finance dude that loves real estate. Where are you licensed? Thanks in advance. So my team is licensed in 48 states. I'm personally licensed in Minnesota and Texas, and I'll be adding states for 2026. So some of those states that I'll be adding are places that I get quite a bit just here. I'm getting a lot in like Missouri and Florida and Georgia. So I'll just kind of be looking at, where it makes the most amount of sense, I guess. I don't think I'm going to do California. I got a lot of friends in California on the team where I'm going to just let them go nuts out there. But I'm always here to basically kind of support my team members as well. I'm a real estate agent in Georgia. Any advice on getting started? Absolutely, yeah. So the biggest thing with being either awesome, North Carolina, thank you for shouting it out. The biggest thing, if you are good at networking, then the better profession to be would either be insurance or mortgage. I think those are more B2B. You can be very successful in those industries if you're better at networking. But if you're better at marketing, going directly to the consumer, then real estate makes a lot of sense. And if you're not sure if you're better at either or, you can become duly licensed, and I can show you how to try your hand on at least the loan side. I have very specific playbook stuff that I walk loan originators through for free. It comes with some tools that can help you as a real estate agent as well. But the biggest advice that I would have is if you're not sure what you want to be doing on the marketing front, I have some ideas on that. I would start with a team. So if you get on a team that has a lot of marketing and they're going to get you active and they're going to get you in front of a lot of people doing a lot of daily activities that are going to be income producing activities, that's what you want to be doing. You want to be active in the business that you're in. You don't want to be, the alternative is some of these brokerages have very little support, but they pay you almost everything for, what you're going to be closing. That's where you want to get to eventually. Once you have, a steady stream of clients and income, you want to get to a place where you're going to make the lion's share of the commissions without having to pay your broker. But if that's not where you're at and you need the support, take the support. Being active is a hell of a lot more important right now than getting the bulk of your income. And you want to definitely get your own CRM, even though the team is going to come with their CRM. You want to get your own because you want to build your own book of business. It's your business that you're going to be able to take from one place to the next. And the idea by joining a team, you don't want to be on that team forever. You want to get your feet underneath you until you can kick off the training wheels and then move up to that next step. So that's my advice, just real quick on what to do as a newer real estate agent. And I appreciate you being here. Does an NMLS license allow these dang notifications? I gotta get rid of these. Does NMLS license allow a loan originator to do a loan in all 50 states? Only if they're licensed in each of the 50 states, right? So, like for example, I'm only licensed in 2 states right now, but I have people on my team that cover all 48 of the 50 states. My company is only licensed in 48 of the 50 states. They're not in New York. They're not in Connecticut. And so I have a friend outside of my company that I refer those to. So like there are some gentlemen on here that needed some help in New York. I introduced them to my friend and she was able to help them out with their loans in New York. So that's kind of a little bit of a resource that I'm able to provide outside of states that I'm not currently active in. But as I'm on here and I get more people asking in certain states, I'm adding those states, in 2026. The other thing to note though on the 50 states though is if you work for retail, a depository bank, then you don't need to have your state license. You can be under the federal charter and you can operate in all 50 states. And I've done that before. It's kind of sweet. So, just got the license last month. Dang notification. Just got the license last month. Not working at the moment, but this is good advice. I appreciate you being here. The other tool that I show people how to use, both in real estate and mortgage loan originators, is called Z-Lister, and I'll share it with you for free. And I, basically do a weekly Zoom meeting as well for people because the simple thing that it does is it takes a Zillow listing, so you can borrow a Zillow listing, and then you can repurpose that listing. So you reach out, like maybe you are going to find a brokerage where you can borrow each other's listings. Even if you don't have that, you can reach out to any real estate agent with any listing that you want to, like, this is a house that I want to, I feel it will attract the kind of buyers that I want to work with. It can repurpose that listing and put it on Facebook Marketplace, Facebook groups, Craigslist very quickly and easily. And actually, I'm going to be doing this. I typically come on 10 a.m. and 4 p.m. and I do kind of like a podcast style looking format. But I'm going to be adding a third format because TikTok is, just by the way, has been phenomenal. It's been going really well. So I'm going to be doing more of what is working. And so what I'm thinking about doing is I'll just make another, backdrop, and it's just going to be kind of like ask me anything, watch me while I work. I'm not going to be putting on a show, presenting to a camera, but I'm going to be on camera and I'm going to be doing what I call the Z-lister method, where I'm going to be reaching out to real estate agents, asking for their permission to go ahead and repost their listings. And I'll show you guys as I'm doing it, exactly how I'm doing it, what the effectiveness of it is. And then all of those listings get in front of the buyers that are searching for those houses on those platforms, and they reach out. And so when they reach out, I can get them pre-approved. If they're already pre-approved, I can send them back to the real estate agent. That real estate agent is going to like that I'm giving them somebody that's pre-approved or a cash buyer. And it's an opportunity for me to strengthen my relationships with those real estate agents because I'm helping them, and people want to work with people that help them. So that's how it works on the loan side. But the tool to be able to go out and get more buyers is also there at your fingertips, where you're able to just hit click, 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 and get out in front of a lot of buyers that might be wanting to work with you. Because right now, even though the market's a little bit slower and contracted, there's still people buying homes, just flat out. Just because there's less people out there doesn't mean that there's not a whole lot of people, closing on homes. I just closed on one yesterday, for example. So that's just how it is, and using technology in a way that's going to get you out in front of a lot more people is definitely a really good idea. What processing software do loan originators use? So many. I mean, my loan origination software, LOS, that I prefer is called Arrive. Most brokers really like Arrive. My company doesn't use it. I have my own. And so I always start with that software, and then I take that loan application, then I put it into my company's system. But I mean, processing software, there's endless amounts. I mean, off the top of my head, MLO, Flow, what are some of the other ones? A lot of them are like built into Go High Level, which is really a beefy CRM, and I would recommend anybody that's in this business to use Go High Level in some fashion, in some form. The more you use it, the better off you're going to be in the long run, because it's basically, a silent assistant, somebody helping you in the background that's going to be maintaining relationships with everybody that you've done business with, and all the new people that you're going to be talking with and meeting. They go in there, and you have your electronic assistant that's going to keep maintaining that relationship with emails, text messages, and probably like AI calls. I don't know. I'm not doing the AI calls. The laws around that scare me. Like, they're like, if you call somebody and it's found to be a violation of whatever, I mean, it's just like these the fees and punishments that they talk about are ridiculous. So I'm not going to go anywhere near that. I'm certainly afraid of those things, but again, there's always a loophole around things. So you can contract somebody that's outside of the country, they can do it, and they're not liable. And I don't think they have the laws right now that pierce through them to get to you, even though you've contracted them. So I could be wrong on that. Don't take legal advice from the internet, from the mortgage dude on the internet. But and like I said, I'm not eating from that soup anyway. So just food for thought. Oh man, I just looked up. Somebody liked this thing a whole lot. And again, I'm newer to TikTok, so I don't really know. I don't remember how to do all the things. But if you hit like, it helps me out. If you comment, thank you so much. All that stuff helps me out. If you share this with somebody that might be looking to buy or refinance, that helps us both out. And then what are the other buttons? I don't know, favorite, follow, share, whatever it is. But the more buttons you play with there, the better off it works for the channel and gives me more opportunity to get in front of more people. And I appreciate that very much. With that, I have a little less than 20 minutes left on this segment, so definitely do use that opportunity to get any questions that you have, whether it's about pricing, just general questions, real estate, mortgage related, and I'm happy to run through it. Some of the different things that we have talked about are creative ways to pick up investment properties if you want to become a real estate investor, different options for down payment assistance, like the loan I closed yesterday. It's kind of a sweet loan where it's basically a conventional loan which will allow you to buy a house that I would say needs minor fix up. Right, so like if you have a government insured loan, VA, FHA, USDA, they have a higher standard of how the house needs to look in order for you to be able to buy the house and get that government mortgage insurance. But so that means like if there's chipped and peeling paint, if there's a missing handrail, if there's like little minor things, the government insured loans are going to require that they be fixed prior to being able to close. Conventional conforming, they don't care. As long as the house is livable, they don't care. You can have a whole bunch of chip peeling paint as long as it's not wood rotten so bad that there's a cold breeze coming in the house, right? A wall still needs to be a wall. But if there's a health and safety violation and the house is basically condemnable, then it's not something that's going to be able to be financed with conventional either. But I'm putting out that distinction to talk about the loan that I closed yesterday. It was a conventional conforming loan, which requires a 3% down payment. But this one comes with a 2% grant. So he got free money to help with the purchase of the property. And so he bought a $300,000 house with only $3,000 out of pocket. So that's kind of a neat deal. I'd say it's similar to, if you're going to go rent somewhere, right? If you have to pay first and last month's rent or you have a security deposit, you're looking at a similar amount of money out of pocket. And since he closed yesterday, think about this now, his next payment isn't until February 1st. So that's different than renting as well. Question here, can you explain the beautiful bill and portable interest? My house mortgage is at 3%. So the portable interest was something that they were just kind of talking about, like they're floating the idea. It doesn't exist yet. Just like they were floating the idea of a 50-year fixed rate loan. Those things are not yet marketable, but as I understand, the portable, the portable interest, you'd be able to take that really low interest rate on that loan amount and then apply it to the other house, and rather than paying the loan off, you're able to continue making those payments, and whatever you have left on that that loan, you can apply it to the next house. You're basically taking the seller's money to fund it, and then you're applying it to the next house, and you're able to make the new payments on the new house. That's how I understand it. I don't understand it really well, and it's not something that exists. And I don't think it's going to be a viable deal. I think it's bad for the economy. What do you think about the real estate bubble. I mean, I definitely lived through it, right? So I started in 1999, and we had the '07 bubble that popped in 2008. And, I went from being able to buy investment homes in like the 200,000 range. And then I think we were picking them up for I know we picked up one for $71,000. And then we were able to later, when the market recovered, we were able to sell that house for, it was over, I think 250, 275, something like that. So that whole bubble that popped, that was basically the housing market leading a recession, right? Where normally it follows. And I think they did the fixes in place to where that's not going to happen again. Not to say that home values might not come down, but man, if you would have seen the sausage that we were making behind the scenes, where we were not verifying income at all, we were not verifying, assets. There was literally no income, no asset. You just basically were going to pull your credit. If you tell me you make, $20,000 a month at McDonald's, all right, I'm not going to verify it, right? And you were able to buy, $1 million house if you were in charge of the fryer at McDonald's. It just didn't make any sense. And so they fixed that now to where everything is being underwritten with common sense, and you need to show an ability to repay. So that's a big difference between now and then, where the underwriting of these deals were just horrible. And that led to massive amounts of foreclosures. And the massive amount of foreclosures is what pushed the prices down. And just like anything else, because the prices went so far down, a lot of investors were able to come in and buy them up. And when the market stabilized again, a lot of investors made some really good return on their investment. I don't think that's what's going to happen here again. We might see pockets of areas where prices come down. We certainly need to solve the affordability crisis, meaning the average age of a home buyer, a first-time home buyer, the average age is now 40 years old. That's ridiculous. That's way too old. That means that everything is priced out so the younger generations are not able to get into homes. That's awful news for the economy. That's awful news for home prices. But I mean, if you think about what's going to happen as people age out, the older generation isn't going to require homes forever, right? A lot of times we move out forever. I don't know what words you can say on TikTok, but I think you might get what I'm saying there. And eventually those vacancies might have, downward pressure where these houses that are, so expensive, there's going to be a supply and there's going to be a demand. And right now I'm seeing there's a lot of demand that's not able to come in and fill those homes, right? It's really expensive to fill some of these homes. I can't believe some of the stuff that they're building around here in North Texas. But there's only so many people that have the ability to repay the amount of outrageous, mortgages that would take to, or just have the money in general to buy some of these monstrosities. Do you see the economy going bad next year? I'm not a doomsdayer. I haven't pulled my money out of the market, even though we're seeing signs of fractures in the markets. I think what's going to end up happening is we're going to lean into the printing press like we always do, and that's going to stabilize. I think we're going to see new highs. So that's that's what I am doing right now, even though I'm seeing some scary pullbacks in the market. I'm not a doomsdayer there. I think we're going to probably see some slow growth. That's just the way that I'm investing right now. So if I'm wrong, it might be really expensive for me, right? and then I'll be doing the painful wait for a recovery. I'm 46 years old. I have enough time to wait, but that's just my 2 cents on what I think. Right now, the forecasts are that there's going to be slow growth in the home value market nationwide. They're talking about something like 1 or 2% appreciation from the high values that they're already at, that they're going to go higher. I think that's accurate. I think we need to see the median wage come up to combat the affordability crisis. So I don't know how to get that there, but it needs to happen. With inflation, we need to have, offsetting inflation in wages. And then also interest rates are going to come down. I don't know that, but, strong evidence is that the current chair of the Federal Reserve, the term is up in March. He won't be there. I think it's going to be Scott Bassett is going to be in there. I don't think that's been named yet. I think the president said that he knows who's going to be there. See, I bought a house 3 years ago on this crazy market. My house has gone up a little bit. That's another thing we were talking about yesterday. I was talking about, is that 1 to 2% year over year? Yes. I was talking about renting versus owning and saying how important it is if you're going to buy a house, you need to have a little bit of a more long-term plan. Whether that means you're going to live in the house for, like 5 years or more, or if you're just going to own the house, meaning if you're going to move out, that you're going to rent the house. And what I mean by that is you need appreciation because it costs a lot of money to sell a house. So if you have a $500,000 house times a 6% cost to sell it, that's $30,000. So it needs to appreciate $30,000 for you to essentially break even on the deal. So I want people to understand that and think about that when they're looking at buying a house, because I don't want you to be in that circumstance where I'm like, oh, I might rent, I might go own, I'm going to go buy a place and, things change and I want to go and sell it next year. You're going to be upside down because there's no way that house is, it's unlikely that it's going to appreciate that much. Because, I guess maybe 1 or 2%, what is that? 5 or 10 grand of appreciation on that $500,000 house in a year. But it would cost you about 30 to sell it. So something to think about there. If you're only looking at a 1-year plan, renting can make sense. I'm not one of those, a lot of real estate agents and loan officers are on the always own plan. And I'm just saying it's not for everybody and it's not for every situation. But with that being said, I own 2 houses, right? So it's like, what am I doing? I own. So that's also just kind of like, I value homeownership, right? So good questions. We got about 5 minutes left here in the hour. And then I'm going to get back to doing work. I've applications to get in here, but if you have any last comments or questions, by all means, I appreciate you guys being here and happy to answer any of those questions with you, for you. Again, my history is I got started back in 1999. I'm a good resource because I've helped a lot of loan originators and real estate agents structure even very complicated deals. And that sets me up to be able to answer any questions that you might have. I'm also happy to price out a deal if you have something that you're currently working on. And let's see who shared links with you. Oh, I appreciate that. I got a nice message here. Sorry for interrupting myself with it, but that was very nice. Thank you. So with that, a few minutes left here in the hour. Thank you guys very much for being here. I appreciate the participation in the comment section. That always makes it a lot easier for me, a lot more enjoyable, I think, for everybody. And oftentimes I will have guests on here. So whether they are loan originators, real estate agents, sometimes our friend from California, she's an underwriter. Sometimes she comes on here as well. But I'll spotlight anybody just to have just kind of a general conversation about the market and things that are going on. So if you're a real estate agent, loan originator, insurance agent, like, I don't care. Like, it's more enjoyable, I think, for everybody to have a conversation rather than just get monologue for for an hour. It can be a little bit dry or different. So definitely enjoy when I get guests on here as well. So, but with that, I am going to get back at it. Thank you guys. I'll be on 10 a.m. and 4 p.m. Central, Monday through Friday, with a lot of exceptions. Like, I'll be going out of town. What is that, next week? Let me see. Where's my calendar? Ugh. I have a new computer here, so I'm not seeing my calendar. Yeah, next week, end of next week, I'll be out of town. Obviously, we had Thanksgiving last week, and Christmas is coming up. So there's going to be some times when I won't be here. But for the most part, for a generic rule of thumb type of a schedule, I am around Monday through Friday, 10 a.m., 4 p.m., and I'm talking about adding another segment where it's not so much a presentation or a show. It's just going to be like, hey, watch me work. Feel free to ask any questions, and I'll be demonstrating how I go out and network with real estate agents and generate more buyer leads through Facebook and Craigslist using a software. So if that sounds like something that you'd want to follow along with, hit the follow button. I appreciate you guys being here. Thank you again for all the comments and questions, and enjoy the rest of your Wednesday, and look forward to seeing you guys back here again.